Hi everyone, in this video we will be going over A-Level Accounting 2022 October-November Paper 2 question number 4. This is the structured paper 2 which consists of 4 questions. 2 of them are of 30 marks and 2 of them are of 15 marks, and we are given a total time limit of 1 hour and 30 minutes. And since question number 4 is of 30 marks, ideally we should be spending about 30 minutes in order to complete this question. And in this video as well, we will be attempting to solve this question under 30 minutes. So without any further delay, let's get started. Brady manufactures one product which is sold through agents who receive a 10% commission based on the selling price. So the commission is going to be 10% of the selling price, right? Then the following budgeted information is available for December 2022. We're given the sales revenue, direct materials, direct labor, variable production overheads, fixed production overheads, fixed administrative overheads, selling expenses including sales commission. All selling expenses with the exception of sales commission are fixed. So the sales commission are a variable cost, whereas the remaining selling expenses are fixed costs. So let's figure out the variable sales commission. We already know that the sales commission is 10% of the selling price, right? And we have our total sales revenue right here, which means that the total sales commission is going to be 10% of this value. So that's going to be 78,000 times 10%, which we can write down as 0.10, which results in our sales commission to have the value of 7,800. All right, then the fixed selling expenses is going to be the selling expenses including sales commission minus the sales commission. So that's 13,200 minus 7,800, which results in the value of 5,400. All right, now let's have a look at our question. We need to calculate for December 2022 the budgeted total contribution. And the formula for total contribution is just going to be the total sales revenue minus the total variable costs. Okay, now we were given the total sales revenue to be 78,000 right here. Let's write it down. And we need to subtract all of our variable costs. So the first one is direct materials with the amount 21,600. Then the second variable cost is our direct labor with the amount of 14,400. Then we have our variable production overheads with the amount 4,800. And we also have sales commission, which is a variable cost. And the amount for sales commission, we just figured it out to be 7,800. So we need to subtract this as well. And this results in our budgeted total contribution to have the value of 29,400. Let's move to the second part. We need to figure out our budgeted total profit. Now the formula for budgeted total profit, we can start with our budgeted total contribution. And then subtract all of our total fixed costs. And we just figured out our budgeted total contribution to be 29,400. Now let's subtract our fixed costs. The first one we have is fixed production overheads with the amount of 9,200. Let's subtract it. Then the second fixed overhead we have is fixed administrative overheads with the amount of 6,100. Let's write it down. And the final fixed cost we have is the fixed selling expenses, which we figured out to be 5,400. So we need to subtract that as well, which results in our budgeted total profit to have the value of 8,700. Okay, now the third one we need to figure out is the break-even point in units. And the formula for the break-even point is just going to be our total fixed costs divided by the contribution per unit. Okay, so we just subtracted the total fixed cost right here. So the total fixed cost is going to be 9,200 plus 6,100 plus 5,400. Now for the contribution per unit, we already have our total contribution right here. That's of 29,400. Now, in order to figure out the contribution per unit, we just need to divide this amount by the total number of units, which is 12,000 in this case. Let's figure out the contribution per unit. We have the total contribution to be 29,400. Now we just need to divide it by our total number of units, which is 12,000. This results in our contribution per unit to have the value of 2.45. Let's substitute this value. This gives our total fixed cost to be 9,200 plus 6,100 plus 5,400, which results in 20,700 divided by 2.45, which results in 8,448.98. And we are talking about units, which cannot be in a decimal number, right? So we need to round it off. That's going to be 8,449 units. All right, let's move to the next part. We now need to state the formula for calculating the margin of safety, and the formula is actual sales minus the break-even sales. Okay, we are now given additional information. Brady has a monthly target profit of 10,800. Now we need to calculate how many units Brady would have to sell in December 2022 in order to achieve the target profit. Okay, so we have the formula, right? Number of units times the contribution per unit. This basically gives us the total contribution, right? And we subtract the total fixed cost, which results in our profit. In this case, the variable that we need to figure out is the number of units, right? So I'm just going to denote that by n times contribution per unit is something that we just figured out above, right? We figured it out to be 2.45. So we're just going to substitute this value. We then need to subtract the total fixed cost. Again, this is something that we figured out above, right here. That's 20,700. Let's substitute this amount. So that's 20,700 equals to the profit that we require is 10,800. So that's 10,800. Now this becomes a simple equation. That's going to be n times 2.45 equals to 10,800. This goes to the other side. That's plus 20,700. That is n equals to 10,800 plus 20,700 is 31,500. This goes to the other side as a divisor, so that's 2.45. This gives the number of units that Brady would have to sell in December 2022 to be 12,857.14. Again, we're talking about units, which cannot be in a decimal number, so we need to round it off. That will be 12,858 units. This concludes the third part. We can now move towards the fourth one. We are given additional information. Brady is aware that he needs to make changes in order to achieve his monthly target profit, and he is proposing the following. Okay, first of all, let's have a look at our fourth question. We need to prepare a budgeted marginal cost statement for December 2022 if Brady makes the proposed changes. Okay, so the first one is to improve the specification of the product and increase the selling price by 0.30 per unit. Let's have a look above and figure out the previous selling price per unit. So the selling price per unit is going to be the total sales revenue divided by the number of units, and the total sales revenue is 78,000. If we divide it by the number of units, which is 12,000, this gives the selling price per unit to be 6.50. Okay, now let's make the change. We now need to increase the selling price by 0.30 per unit. So the selling price per unit after making the change is going to be 6.5 plus 0.3, which results in 6.8. Then the new materials will increase the direct material price by 0.40 per unit. Again, let's figure out the direct material per unit. That is just going to be the total direct materials divided by the number of units. In this case, that's 21,600 divided by 12,000, which results in the direct materials per unit to have a value of 1.80. Now let's make the change. we need to increase the price by 0.40 per unit. So the direct materials per unit after making the change is going to be 1.8 plus 0.4, which is also in the value of 2.2. Then we need to reduce the direct labor rate by 5% per unit. Let's figure out the direct labor per unit. Again, we repeat the same process. We divide the total direct labor by our number of units. In this case, that's 14,400 divided by 12,000, which results in our direct labor per unit to have the value of 1.20. Okay. Now we need to reduce it by 5%. So the new direct labor per unit is going to be the previous amount of 1.2, and we need to reduce it by 5%. So that's going to be times 1 minus 5%, which we can write down as 0.05, which results in the new direct labor per unit to have the value of 1.14. Then we need to reduce the sales commission to 8%. Previously, it was 10% of the sales revenue. Now it is only going to be 8%. Then we need to reduce the administrative overheads by 18,000 per annum by making one member of staff redundant. So this is the rate per annum, but remember that we are only talking about the per month production, right? So let's figure out the amount that we need to reduce per month. That's just going to be the total amount per annum divided by the number of months, that's 12, which results in the value of 1,500. So we need to reduce 1,500 from the administrative overheads. Let's have a look above. The previous administrative overheads was 6,100. Now we need to subtract 1,500 from it. So the administrative overhead is going to be 6,100 minus 1,500, which results in the amount of 4,600. Then we need to increase the advertising budget by 2,500 per month. So this is again a fixed cost, right? Let's have a look above. That will be the selling expenses, since we are advertising it, so that we will have increased sales. And the previous fixed selling expenses was 5,400. So let's add our 2,500 to it. So fixed selling expenses is going to be 2,500 plus the previous amount of 5,400, which results in the value of 7,900. Then Brady is confident that these measures will produce additional sales of 1,000 units each month. So previously we had the sales of 12,000. Now there is an additional 1,000. So the new number of units is going to be 13,000 units. Okay. Now we need to prepare a budgeted marginal cost statement for December 2022. Okay. We will start with our sales revenue. And we already figured out that the total number of units is going to be 13,000, right? And we have also figured out the selling price per unit to be 6.8. So we just need to multiply these two numbers together in order to figure out our total revenue. This gives the total sales revenue to have the amount of 88,400. Now the next step would be to subtract all of the variable costs, right? Okay. So less variable costs. The first variable cost we have is of direct materials. Again, we have the total number of units of 13,000. Now we just need to multiply the direct materials per unit to it. And we already figured out the direct material per unit to be 2.20. So let's substitute this amount. And this gives the total direct materials to have the amount of 28,600. The next variable cost is direct labor. Again, the total number of units is 13,000. And we figured out the direct labor per unit to be 1.14. Let's substitute that. This gives our total direct labor to have the amount of 14,820. Then the next variable cost we have is of production overheads. Let's have a look above. And there were no additional information given about production overheads, right? Which means that what we can do is we have our total number of units of 13,000 and we need to figure out the production overhead per unit from above. Okay, so the total production overhead was 4,800. Now the production overhead per unit is just going to be the total cost of 4,800 divided by the number of units, which in this case is 12,000, which gives the production overhead per unit to be 0.4. We'll just substitute this rate into our statement. That's going to be times 0.40, which results in our total production overheads to have the value of 5,200. Then the next variable cost we have is the selling cost or the commission, right? And let's have a look above. We were told that the sales commission were now to be 8%, and this 8% is of the total sales revenue, right? So let's figure out the selling cost. We will start with our total sales revenue of 88,400, and 8% of this is going to be our variable selling cost, so that's times 0.08, which results in our selling cost to have the amount of 7,072. This concludes all of our variable costs. So let's figure out the total variable cost. That's going to be the sum of these four amounts. That's 28,600 plus 14,820 plus 5,200 plus 7,072, which results in the amount of 55,692. And we need to subtract it from the sales revenue. So I'm just going to write it down in a bracket. And after subtracting the variable cost from sales revenue, we get our contribution. So let's figure out the contribution. In this case, that will be 88,400 minus 55,692, which results in 32,708. Now the next step would be to subtract all of our fixed costs. And the very first fixed cost is our production overhead. Let's have a look above. There were no additional changes to be made to the production overhead, so we can just substitute the previous amount for our fixed production overheads, which is 9,200. Let's substitute this. Then the next overhead we had was the administrative overhead. And we have already figured it out right here. The total new administrative overhead is 4,600. Let's write it down. And the final fixed cost we have is of selling cost. Let's have a look above. We also figured it out right here. That was 7,900. Let's substitute this into our statement. Now this concludes all of our fixed costs. So let's add these three amounts and figure out the total. That will be 9,200 plus 4,600 plus 7,900, which results in the amount of 21,700. Again, this is something that we need to subtract from contribution, so I'm just going to write it down in a bracket. Then after subtracting the fixed cost from contribution, we can finally figure out the profit for the month. And in this case, that's going to be 32,708 minus 21,700, which results in 11,008. That will be the profit. This concludes the fourth part of this question. And remember that we're given the working section right here, which means that all of the workings that we did right here while figuring out the selling price per unit, direct materials per unit, direct labor per unit, total administrative overheads, total fixed selling expenses, and the total number of units should be shown in that particular box in order to achieve all of your marks for the workings. Alright, let's move to the fifth part. We now need to advise Brady whether or not he should make the proposed changes. We need to justify our advice by discussing the issues that he should consider. So remember that we were given the target profit above, and that was of 10,800 right here. Now let's have a look at our budgeted statement. We figured out the profit for the month to be 11,008, which means that Brady will exceed his target profit, but this will only be the case if he increases his selling price per unit and whether or not the customers are willing to pay the increased price. Let's write it down. He will exceed his target profit depending on whether his customers are willing to pay the increased price. Then the next change that we made was that we actually increased the additional number of sold units by 1,000, right? And we do not know how accurate this forecast is and if this target is even achievable. So that's still a question. Let's write it down. How accurate is his forecast of 1,000 additional units? And is the target achievable? Okay, then the next change that we made was to reduce the sales commission to 8%. And these are the sales commission that we need to pay to the agents, right? Previously, they were getting a commission of 10%. So does this decrement in commission actually means that the agents will be demotivated, which could result in the fall in sales, right? Let's write it down. Will agents be demotivated as a result of reduced commission rates resulting in a fall in sales? And since we are talking about increasing the number of units by 1,000 units, does this mean that any overtime will be required and whether or not the workers are prepared to work overtime? Let's write it down. Will overtime be required to meet the additional output? And will workers be prepared to work overtime? Okay, and the next changes that we made was we increased the advertising budget by 2,500 per month, right? There is no such guarantee that by increasing the advertising, the increase in sales will be achieved. So we need to write it down as well. There is no guarantee that by increasing the advertising, the increase in sales will be achieved. Okay, then the next change that we made was to reduce the direct labor rate by 5% per unit, which means that the workers will now be getting a lower rate, which could result in a reduced production level as well as poor quality, right? Let's write it down. Will the decreased labor rate demotivate workers resulting in reduced production levels and poor quality. Okay, now based on these factors, we need to advise Brady whether or not he should make the proposed changes. So I would suggest Brady to proceed with these changes, provided that he is confident enough to produce the increase in monthly sales of 1,000 units. So let's write down the decision clearly. Advise Brady to proceed with these changes, provided he is confident he can produce the increase in monthly sales of 1,000 units. Alright, this concludes the fifth part. We can now move towards the sixth one. We need to state two advantages of cost volume profit analysis. So the major advantage is that it facilitates in short-term decision making. Let's write it down. Facilitates short-term decision making. And the next one, as the name suggests, cost volume profit, it helps control cost in order to maximize profitability. Helps control costs to maximize profitability. This concludes the sixth part. We can now move towards the seventh one. We now need to state two limitations of cost volume profit analysis. So the very first one is that it assumes the selling price per unit remains constant. Let's write it down. Assumes the selling price per unit remains constant. And the second limitation is that it also assumes the variable cost per unit to remain constant. Assumes the variable cost per unit remains constant. Okay, this concludes the seventh part as well as the entire question number 4 of 2022 October-November paper 2-2. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.